What's going on, guys? Welcome to another Tax Talk Tuesday. In today's episode, we are going to go over how you can legally write off your vacations. Stay tuned. So this is our second ever Tax Talk Tuesday. If you missed the first one, definitely go check it out in the link below. We talked about why rental properties can save you a ton of money in taxes. Right now I have Matt, my partner over at TrueBooks CPA. If you guys didn't know, we own a CPA company called TrueBooks. As I just said, we help real estate professionals all across the country. They love it. We love it. It's a great business. So I'm going to go over how I've been writing off my vacations for a long time now and how I plan to write off even more going forward. So let's jump into the very first way that I've been writing them off and how you guys can too. I'll let Matt take it over. How have I been doing it?
Well, let you guys know, Ryan's a big real estate investor. So typically when he goes on vacation, he's really working for the majority of the time. He's looking at deals, he's talking with agents, and he's exploring the new areas for potential opportunities.
And one thing I'll say is no matter where I vacation, I can look at buying real estate anywhere. It could be in Tahiti, where I was at last year. It can be in Hawaii, because everything to me is another market that has potential. It doesn't mean you have to actually buy something there. But my thing is, at what point do you actually become like a real estate professional?
There's two main things that you want to look at when becoming a real estate professional. One, do you spend more than 750 hours in a year on real estate related activity? And two, is it more than 1/2 of your time spent for work?
So two things there, 750 hours. What's that break down to for a week? Let me do the quick math. All right, we're gonna get the accountant. This is what he's good for. He's got a calculator and an iPhone.
14 hours a week, 14.4 hours a week.
Okay, see, I can do it in my head. 15 hours a week essentially is what you need to spend. So 3 hours a day or 2 days a week full time, that makes you a full-time investor. So we gotta spend 15 hours a week as a real estate professional and then over half of our time devoted to real estate. Now, one thing I'll say, and correct me if I'm wrong because I don't wanna get us into any trouble with, you know, who regulates the CPAs? FTC?
Nope, AICPA, but then we're also talking about the IRS.
Okay, so I don't want the IRS or the AITCA.
CPA.
Yeah, whatever. So I don't need them coming after us. So I'm just going to talk off the cuff. I am not a licensed CPA. Matt is, so correct me if I'm wrong in anything I say. So basically we got to spend 15 hours a week and then we got to spend over half of our time as a real estate professional. So to me, a lot of real estate activities we don't even realize we're spending time on. When we're on Zillow looking at potential deals, when we're comping out properties, when I'm going to meet a realtor for coffee and networking, when I am, you know, really almost doing anything can be defined as real estate in my eyes.
Or another big thing is when you're doing analysis paralysis and running deals, running numbers on deals, contacting agents, all of that can be accumulated towards your time spent.
Them watching this video right now is time spent towards their real estate professional career.
Education.
Knowledge.
So I don't think people are gonna have a tough time proving like, yo, I'm putting in the work. You can't own real estate without putting in the work anyway. It's hard. You know, nobody just spends 1 hour, they buy a property and they're done. It doesn't work like that. Every property we've ever bought have spent countless hours finding the deal, negotiating, fixing it up, finding a tenant or flipping it, whatever. Like, it's a lot of work. So my question is, the time's not an issue, but what about how many properties do you need to own? Like, is there a certain amount of money you need to make or anything like that?
So there's no specific income level, amount of properties that you have to own, certain amount of deals that you have to do per year. It's simply time spent in the profession.
So what if you don't buy one house that year?
You could technically still qualify as a real estate professional.
What if you don't own any houses at all, but you're still looking?
You could technically qualify as a real estate professional.
So you hear that first from a licensed CPA, that even if you don't own a house right now, but you are trying to buy one, you're grinding, you're spending over half your time trying to get in the game, you are a real estate professional right now. Is that correct?
Yes.
So I love that. And once you get that designation as a real estate professional, it opens the doors to do so many new write-offs. And one of those write-offs is the vacations like we're talking about. So for me, every time I've ever gone on vacation, I always found a way to incorporate real estate into it. I own real estate in Big Bear, California. Every time I go to Big Bear, I am at one of my properties, staying there, doing stuff at the property, whether it be trying to fix things, get contractors there for the little knickknacks, Maybe I'm going and touring the neighborhoods looking for distressed properties. I'm driving for dollars potentially. I am meeting with my realtor for lunch because I haven't seen her in a while. There's a whole list of things that I can do. But tell them about what I found interesting was the actual amount of time you have to spend on vacation for it to qualify as a write-off.
What you have to make sure you do when you're traveling but still want to write it off as a business expense is how much time are you spending on your business? And it has to be half a business day, so 4 hours.
Right, because a business day is 8 hours long. So all I gotta do is spend 4 hours on vacation per day to write the whole thing off, correct?
Mm-hmm. So this way you're able to now spend time with your family, have fun on vacation, but yet still get business done and be able to take the tax benefit of the write-off.
And then I can write off the meals because we're talking about real estate. I can write off the travel expense, the rooming expense, all that stuff. So pretty much anyone can become a real estate professional as long as they want to do it. They get access to all these write-offs now. They could write off all of their vacation if they just do the right things. Another one that I've found interesting now is this whole world of YouTube and being an influencer. Like, what kind of doors does that open up for me now?
Unlimited. As you can see, there's so many more people getting online and really starting to spend most of their normal lives on camera.
The thing that I've been talking to you about is like, if I vlog a trip, obviously to me, that should be a write-off. I'm going to the beach or the amusement park or something and I'm vlogging it and it is content. I'm getting paid to do this through YouTube revenue, through, sponsorships, whatever.
One of the best things to keep in mind is when you spend money and want to take it as an expense, is the money being spent in pursuit of income? So you could easily argue that a vlogger, a YouTuber taking a trip to, Bali, and he plans to film it and make a nice YouTube video out of it, could be deductible.
And I've heard Mr. Beast talk about this a lot because Mr. Beast does a ton of giveaways. Yes. He'll give away $1 million in Teslas or something crazy, right? For him, he has the hard thing of deciding who's paying the tax on it because technically he's doing it as a production. It's an expense to produce his video and his channel, and he should be able to write off that $1 million in Teslas, but then the receiver has to pay for it, right?
Mm-hmm. If you think about it, the receiver, it could almost be income to them. Similar to Logan Paul and the new Pokemon phase. He's buying these Pokemon cards, selling them for profit, but at the end of the day, his purchase price of these Pokemon cards is an expense. He's buying them for entertainment, similar to the props you would buy for your YouTube channel. It's all towards the pursuit of income.
I think another one that could fall into either category is cars. I mean, we're talking about giving away cars, but for me as a real estate professional, you're always able to write off your car as long as it falls in, what's that section?
179.
So 179, tell them about 179.
Long story short, with 179, as long as the car is used for greater than 50% of the time for business and it's more than 6,000 pounds, you can ideally write off 100% of the vehicle.
So I actually did a video on this. You could find in the link below talking about why I bought my Tesla Model X, how we're going to write off the whole thing this year for bonus depreciation, right? Same type of deal that we talked about with rental properties in the first video. But I think another interesting one is even if you're not a real estate professional, but you're a YouTuber, how does the car play a role? Like if you want to buy this Ferrari to just build this image of yourself, how's that going to play out in the tax world?
The biggest thing to consider with the IRS and when it comes to taking deductions is intent. So if you go out and you buy a Ferrari and your true intention is to film with it, use it for your personal image, really use it to build a following, there's a very strong case that all of that car could be a tax deduction.
And I'll actually use this as a plug for TrueBucks because I've had other CPAs who did not see it the way that we're talking about. They are very strict. They just don't believe in any of the new things that people are doing. I think the tax world is completely changing with how people do business, with everything being so virtual, with just influence and everything growing. But that's the big thing, guys. If you want to be a real estate professional or even want to be an influencer or a YouTube person, you want to get a CPA who understands your business and is willing to support you in that.
There's so many new ways to make money that typically when you reach out to a CPA, they may be stuck in their old ways and may just not be familiar with the new ways people make money online. Vlogging, YouTube, ad revenue, things like that. And so it's not a matter of can I write this off, it's how can I write this off.
Yeah, and the one thing I'll say is before I ever partnered up with Matt, I actually was kind of skeptical of hiring Matt because he was younger. I mean, he's dressed like a normal dude. He's not all suited up like a normal CPA. And then I realized it was like, I actually want someone like that who understands what I'm about to do. I don't want somebody who's old school and's been doing it for the last 40 years the same exact way, and they're going to be resistant to the change that's happening in the world.
I would say one of the biggest things that we get with new clients coming into TrueBooks is saying that their CPA doesn't understand their current industry. And that is what it is. You need a CPA that understands what you're doing, how you're making money, what you're spending your money on, so that again, it's not, can I write this off? It's how can I write this off? And they help you.
Well, and I'll say too, a lot of CPAs don't understand YouTube, right? They don't even realize it can be so lucrative. They don't understand what wholesaling real estate is. You know, try to explain. If you have to explain what wholesaling real estate is and you're a real estate professional, that ain't the CPA for you. I can tell you that. And some may not be willing to get aggressive with bonus depreciation and the things that we're talking about in the first video, because these are all legal ways to bring your tax bill down. And some CPAs don't want to do it because they either don't understand it, they don't even know it exists, or they're not familiar with it.
I would say the biggest one is that they don't understand it, and that, again, you have to find a CPA that's willing to work with you and understands your business.
Well, that pretty much covers how I write off all my vacations. I was doing it as a real estate professional. Now I'm doing it as both a YouTuber and a real estate professional, and you guys can do either of those. As Matt explained, you don't have to own a lot of real estate to qualify. And my guess is you probably don't have to be making a lot of money as a YouTuber to qualify either. So if you got value out of this, do us a big favor, go hit the like button, go hit the subscribe button, go subscribe to Matt's channel. We're gonna link it down below. Follow us both on all the socials. And if you like these Tax Talk Tuesdays, leave us a comment and tell us you like it, and we'll do more of them. Anyways, guys, thanks for watching. Take care.